Well, the 1099 reporting requirements, as they existed for years, stated that if a person paid someone $600 or more in a calendar year for services, rents, royalties, interest, and other types of payments, that there was a requirement that the payee issue a 1099 to the payor. The 1099 reporting rules, as they existed for years, required that a payee issue a 1099 for payments made to an unincorporated person or entity for the performance of services, interest, rents, royalties, and other payments, other types of payments. In 2010, two bills were passed that expanded the 1099 reporting requirement. The first act was the Small Business Jobs Act of 2010, which expanded the reporting requirements to include or to treat rental real estate as a trade or business. As a general rule, rental real estate is not treated as a trade or business for purposes of most provisions of the tax code. But under the Small Business Jobs Act, the 1099 reporting requirements were expanded for payments made in 2011 and forward to say that if you pay an unincorporated entity or person for services, interest, rents in the business of rental real estate, you will now be required to issue 1099s. The second provision in the Small Business Jobs Act was to double the penalties for failure to file 1099s, generally from $50 to $100. There are many tiers of penalties, all of them doubled, but the general rule is increase from $50 to $100 per occurrence for the failure to file. The other act in 2010 that expanded the 1099 reporting requirements was the Health Care Act. Historically, the 1099 reporting provisions have only applied to payments to unincorporated entities and only for services, rents, royalties, interest, other types of payments, but not for the purchase of goods. Under the Health Care Act, payments to corporations as well as payments for the purchase of goods would be subject to 1099 reporting. For instance, if you have a business and you purchase $600 or more of office supplies from a large corporation such as Office Depot, you would be required to issue a 1099 to Office Depot for the purchase of those goods. When Congress requested comments on the expanded 1099 reporting requirements, they were bombarded with requests to repeal the requirements, mainly from a cost-benefit analysis, because it was going to require large and small businesses to incur tremendous additional costs in reporting all of these payments to all their vendors. One of the largest contributors to this effort for repeal was, of course, the CPA profession. And in March of 2011, the House passed a repeal bill. In April of 2011, the Senate passed a bill. And as of April 2011, the expanded requirements were repealed retroactive to the beginning of the year. With one exception, the increased penalties remain in the law.